Good morning. You're watching a home broadcast of Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Thursday morning in Manila. We are about an hour into the shortened trading day. Let's go straight to our top story. Infrastructure spending surged in the month of April when the government poured out money for the construction of COVID-19 quarantine facilities. Data from the Budget Department showed infrastructure and other capital outlays increased 42% to 40 billion pesos from 28 billion pesos in April of last year. But the figure in April was lower than the spending of 62 billion pesos, which was registered in March. The spending spike was mainly due to the construction of isolation facilities and the health department's purchase of medical equipment. Recall that the national government converted the Ninoy Aquino Stadium, the World Trade Center, and the PICC Tent Forum into quarantine spaces for mild and asymptomatic COVID-19 patients. Despite the spending surge in April, the total spending from January to April was down by 5% to 196 billion pesos. The DBM said this was mainly due to the temporary ban on all construction activities during the enhanced community quarantine. President Duterte placed the entire Luzon under the ECQ lockdown level in the middle of March. It ended in May. Okay, kicking off the market report with some bleak news. This just in, I'm taking my notes out here. You've got the Asian Development Bank seeing developing Asia's growth this year, the slowest since, get this, 1961. So they've actually just cut their 2020 growth forecast for developing Asia to 0.1%. This figure is revised from the previous 2.2% growth that they had in their April report. However, they are maintaining a 6.2% growth in 2021, but they are ruling out a V-shaped recovery. They've said that multiple waves of the outbreak is still possible. Sovereign debt and financial crisis cannot be ruled out. And you can actually see here on my terminal how Asia Pacific is now just, completely in the red. We just got this news out a few minutes earlier on. And this follows, of course, having U.S. stocks dropping for the first day in 4 days amid the worrying increases in coronavirus cases. Japanese shares were already in the red ahead of this ADB report. I'm going to try and make that terminal bigger for you so you guys can see that. And this on the back of surging infections. You've got them increasing in China yet again. There are containment measures in Beijing. They have now canceled some flights over in Beijing. Texas in the United States reported the biggest 24-hour increase in hospitalization in 2 weeks. And even Brazil, they're having record highs. So according to a senior global market strategist at Wells Fargo, the market is searching for a new catalyst. They said that this narrative around policy, stimulus, and better economic data seems to be losing its sway. And if you take a look at our local index, we are also pulling back. That's after having ended flat yesterday. We are now at 6,200 levels, trading at 6,214 spot 50. That is down by 1%, following the rest of the Asia slump. And this on the back of turnovers actually still well above average, at least yesterday. That was around 8 billion pesos worth of trades, but net foreign selling remaining rather elevated. So still above 1 billion pesos for the third straight session yesterday. Phil Stocks had said that even if we ended in the green yesterday, it was really only Conglos that were the gainers. The rest actually declined. There's still mixed sentiment. And apart from ADB, we also had the IMF saying they are going to be slashing economic forecasts this week. They said that the crisis is unlike anything they have seen, the world has ever seen. So they have not yet slashed their forecast, but they are set to do so this week. First Metro Securities saying the index is set to trade sideways with a bit of an upward bias, but this, of course, was released ahead of that ADB news. Let's just take a quick peek at the sector and see whether there are any bright spots whatsoever. You've got actually industrials bucking the sell-off. That's up by 0.4%. The rest of the sectors are heavily sold off. Holding firms leading those declines. As I mentioned earlier on, they were the ones rallying yesterday. They are now also the ones being sold off. That's down by 1.5%. And just a quick peek at our big movers and laggards here. Let's take a quick check on that. Jolly Jollibee Food Corporation up by 2.9%, so bucking the rest of that sell-off here, whereas others like Bloomberry, ICTSI, SMIC all sustaining quite massive losses. Now let's take a quick peek at JFC, because incidentally, this comes of course on the back of news that they will be fundraising for the pandemic impact. So another one that will be tapping the global bond market. Recall that there was this landmark PLDT bond. It's a Reg S US dollar denominated bond that they priced and was actually 18 times oversubscribed. JFC following suit. Recall that the nation's biggest companies are to be repaying the most debt ever in history by next year. So they actually need to finance that. And central banks are keeping the rate rather low. And so it might actually be a good time to be taking advantage of that. They said that they have now mandated several banks, and investor calls will be starting from June 17. So that was actually yesterday. Now, what will they be using the proceeds for? General corporate purposes, and also just precautionary measures from unforeseen eventualities, and also just fund the initiatives of the group. They have highlighted, however, they have 26.5 billion pesos of cash still just sitting there as of the end of the March, saying that it gives the company enough liquidities. But still, they had reported the first quarter, a painful first quarter, which swung to a net loss of 1.8 billion pesos compared to a net gain in the year prior. Another bright spot for JFC, and also all other restaurants really in the metro. Restaurants are set to be reopening this week for dine-in customers, at least in the capital in Manila, if they are able to meet the government safety protocol. So from Monday, they've actually been allowed to operate at 30% seating capacity with very strict hygiene and social distancing measures. Now, a couple of others that are going to be tapping the bond markets are a couple of other banks. Actually, I'll just pull out the banking index for you guys here, and that is RCBC, but they are not tapping the foreign market. They're actually going to be using their shelf and doing a peso bond sale this year. BPI, on the other hand, is set to plan or issue what will be the country's first COVID action response bond. So there's no such a thing as COVID action response bonds, and BPI is set to do that. The proceeds will be used to finance their micro, small, and medium scale enterprises. And they mentioned that that's actually a relative small percentage of the total bank borrowings, but a large percentage of the total nationwide employment. That is from their BPI president and CEO Cesar Consing. So very interesting. Now, another stock that we need to definitely keep an eye on. I've been watching this since the trading started this morning, and that is Mary Mart. Earlier on this morning, it had hit close to 4 pesos, and take a look how it's trading right now. It's actually back to 3 pesos and 4 centavos. But this again, compared to their IPO price of 1 peso, is still 300 times, 300%, 3 times rather more than it had IPO'd. And we have been looking at this the past couple of days. It had hit already ceiling 3 days in a row. It's now pulling back a touch. That is down by 10%. Now, recall that a lot of analysts have said that, at these prices, it's a lot of speculation going in there, but also some confidence that they can actually pull off their very, very ambitious plans. And this from Astro del Castillo, first grade finance. The stock is trading at a premium valuation, but so much confidence is out there, so much inquiries, and the investors have not stopped buying that. But it does seem that a lot have now been profit taking. Another couple of stocks that I do want to watch out for are the ones that had IPO'd last year. So how are they doing? One is actually Axelum, okay? And that is trading now at 2 pesos and 60 centavos after it had IPO'd last year at 5 pesos. And that 5 pesos was already a significant cut of what they had been hoping to raise. And now they're saying the IPO proceeds, so this was around 1 billion pesos of proceeds that they got last year, will be now used to prepay their loans and save on their costs. So that's a very interesting development here. Axelum down by 2 6/10%. Another one is Pepsi Philippines. That will be on a trading halt today on the fact that their public float is now below 2%. So that's actually much below the 10% minimum that is required by the SEC after Lotte bought 31% of their outstanding shares. They said they will soon disclose their plans on how to comply with the minimum public ownership. So more markets later on in the broadcast. Okay, meanwhile, let's check in on other headlines we are watching this Thursday morning. The Bureau of Internal Revenue has further lowered its tax collection target for 2020 by nearly a fourth. That is due to expectations of a severe economic slowdown. You can see on our screens here, the collection goal for the year now stands at 1.7 trillion pesos. That is down by more than half a trillion from its original target back in the month of March. Now, prior to the pandemic, the agency's target collection for the year stood at 2.6 trillion pesos. Excise tax collections had the biggest cut at nearly 50%. Income taxes are also expected to be lower by 20%. Tax collections dropped a whopping 62% in April. That's as governments opted to stop economic operations to curb the spread of COVID-19 infections. Meanwhile, the BIR is also going full steam ahead with its plans to tax the online service platforms, including streaming services such as Netflix. The tax agency said it's also focusing on the registration of online sellers, although they insisted that only large online merchants will be taxed. Under the train law, those earning less than 250,000 pesos a year are exempted from paying income tax. The move has since earned backlash from netizens and small online business owners who are likewise reeling from the pandemic's impact on their work and livelihoods. The Finance Department assures the public that the government remains committed to the Universal Healthcare Program. Finance Chief Sonny Dominguez said discussions are currently ongoing to address funding issues. That's after PhilHealth floated the idea of possible delays in the rollout of the program. PhilHealth President Ricardo Morales earlier proposed to postpone the UHC. That's as the health insurer is expected to be in a deficit up to 2024. Higher taxes on sin products were expected to plug the funding gap for the healthcare program, but sin tax collections have been plummeting recently due to the lockdown and liquor bans imposed in some parts of the country. Meanwhile, the Philippines signed yet another $500 million loan agreement with the ADB. This to supplement the budget of the Pantawid Pamilyang Pilipino program, or 4Ps. This brings ADB's total lending to the Philippines at a record $2.6 billion so far this year, already exceeding the $2.5 billion it extended in 2019. As of June 5th, the government's total foreign borrowings for its COVID-19 response effort has hit $6.5 billion. That's including bonds and grants. Fuel products remain cheap. That's despite the imposition of new oil import duties taking effect this week. President Duterte issued an executive order temporarily imposing an additional 10% tariff on imported crude oil and refined petroleum products, this to help deepen the country's war chest against the pandemic. But Energy Secretary Alfonso Cusi said these tariffs should only raise pump prices starting the third week of June. That's after fuel companies exhaust their old tax inventory. Prices are expected to increase by up to 1 peso and 60 centavos per liter. That's once these new tariffs hit. Cusi warned fuel companies against applying new prices to old inventories, saying it will not allow any unfair practices to derail consumers, especially given the challenges we continue to face in the midst of this pandemic. It's not just social contact that requires personal protective equipment, but banks also now require a different kind of PPE to protect their customers' data and information in this time of rapid digitalization. This is according to East West Bank, and we have with us on the show Chief Information Security Officer Joey Regala. Good morning, sir, and welcome to the broadcast.
Good morning. Good morning to all of you.
Sir, I like this nice analogy you guys have said. What do you mean exactly by a different kind of PPE for banks?
Yeah, as compared with the personal protective equipment, employees right now should also have the protection that they have, and I call it people, process, and equipment. So when we say people, just like what Frank Abagnale said, that the hackers are, it's easier to hack right now 4 times than 40 years ago. So which means to say we really have to protect the individual or the employee. And most of our employees right now, around 50%, are working at home. So there's a different environment when you say work from home. just like a CISO, we should be adaptive, just like the chameleon. Whatever cyberspace or whatever terrain that we face, we have to adjust to it. And just like the PPE, the first is people. We have already enhanced our awareness to our employees. That means we've sent online alerts, especially for phishing attacks. Danny, right now, phishing has increased since the start of the COVID-19. Why? Because they know, the hackers know that a lot of people are working at home and they're outside the network of their company. So they have released different flavors of phishing, and most of the subjects are COVID-19 donation or coming
Sad.
from a yeah or coming they're taking advantage of it, or coming from the administrator of your Office 365. So as
Mm,
East West Bank CISO, we have enhanced our awareness to our employees, and we are conducting right now webinars,
okay.
consistently conducting webinars to warn them on the things that's happening. And of course, the second P is process. We have to tweak a little on the policies that we have right now, since policies were designed for um, in-house strategy, but right now we are working outside the network. So we have to put in more policies to tighten the security, especially for work from home or working outside the network. And the
Sir,
last is
go
yeah,
ahead, sir. Go ahead, sir.
yeah.
Equipment.
And
Yes,
of
go
course,
ahead.
the last is we have to maximize what we have. It doesn't necessarily mean that you have to buy new tools, but you have
Okay.
to, just like you have to retool, or you have to look for the maximized use of what you have right now, the tool. So basically, banks are using the VPN,
Mhm.
the data leak protection, the intrusion prevention systems, and the others that will uh, maximize or secure more employees working at home. Yeah, you have a
Sir,
question?
yes, sir. Just to press you on that, on the issue of cybersecurity. This was, of course, expected, right, from the beginning that it will probably increase. As you mentioned, the things have been changing dramatically. But how, to what extent do you feel that it is now contained? Right now, you've had a few months already to readjust. People have already started working from home as possibly the new normal for some months to come. Can you say that you've managed to contain it, or can you say that it might even be getting worse?
Um, as information security, we are always looking at the risk base. We have also always have an attitude of risk. It's always risky. We do not want to be comfortable with what we're doing right now. But as I said, we have already contained most of the threats, because every day there's a new threat coming up, and we are ready for it. But as I said, since the attacks are increasing, we are maybe double or triple in monitoring these attacks, and putting in new technology and new tools, and to be able to mitigate these new attacks.
Okay, sir, I'm sure that as a bank, every bank has been on digitalization path even before this COVID-19 pandemic. Is there anything that's going to change dramatically when you talk about the investments you've already made and what you had planned initially? You said that you're going to be using the tools that are available. Do you feel that these tools are going to be useful, or is there a need to be more disruptive, to be more innovative in the face of this pandemic?
You got the right words, disruptive and innovative, because uh, since 2014, we have already declared, if you don't go to the new technology, which I say cloud, going into the cloud, it's either you sink or you swim. And since banks right now uh, are moving into digital technology, we have to adjust our tools catering to that. Meaning our in-premise security might not be useful or that efficient if your application is residing in the cloud. And it's a good thing. We have BSP to guide us. They have the BSP 982, and they have a guidelines on cloud applications outsourcing. And we are very thankful that they have given us guidance. And it's just like the Bible of the CISOs. So if you're going to tell me that if it's improving, yes, we are improving. We just have to follow the basic things that they have enumerated in BSP 92. Most probably uh, on the cloud, securing your cloud, your application residing in the cloud.
Okay, sir, you mentioned work from home, and I think, if I'm not mistaken, 50% of your employees are working from home. Is this a temporary thing? What's your plan here? Are you going to be investing in the security of them actually working from home more sustainably? And how has the experience been? There have been, there's a difficult thing in that the banks need people physically in the banks for security purposes. There's still a skeletal force. It's probably not possible for everyone to be working from home, but to what extent is this part of your new strategy?
Let me answer you in the CISO's point of view. As a CISO, if your employees are working from home, of course, on the first few weeks, it was a nightmare. Imagine you don't know what they're doing at home. But as again, going back to my PP, yeah, you don't know what they're doing at home. They're in their laptops and they want to access their
Oo nga.
application. So again, we went back to, as a chameleon, you have to adjust to the environment and went basically with the first P. The first P is the people. We made them aware. It's just like an insurance. You have to let them know why and not the how. Why are we protecting the information? Meaning to say, it's not just restricting them for some limited access, but we are telling them the reasons, what will happen in case the information asset is stolen. So the consistent guidelines, we gave them a number, I think a number of work from home guidelines when it for the physical security, for the logical security, and of course for the behavior. As I said, this work from home affects not only the tooling, but of course the culture of the employee, because employees were used to working inside the premises wherein there's the you're protected by so many security tools. But when you're at home, uh, the security is now relies on the endpoint. So that is the antivirus and all of those other tools that that we have put in, like the virtual private network. So in short, moving in from a 100% working at the office and moving into a partial work from home,
Okay.
in my opinion, there will be some adjustments in some companies that they will maintain the work from home environment, because it's kind of some work can really be done remotely.
Okay, so it's actually a possibility that this is the new normal. Hindi lang siya contingency plan right now if you're able to implement these security tools. Sir, I mean, it's great to invest, as you mentioned, in new tools, being innovative, but won't this increase transaction costs for banks? Won't that be passed on to consumers, and that's why a lot of banks have been very hesitant to invest in digitalization, because hindi mo recoup right away. There's still a lot of big banks that are still doing brick and mortar, not completely paperless. To what extent can you balance, how much this investment in security can actually hurt the bank's profits, especially in this time where you're expecting a lot of loan defaults as well.
Yeah, as I said, when you say investment, it's not just putting buying all things at the same time. There's what you call the phasing. And as banks, since we are bankers, we know what the cost of the investment is. And we, as a CISOs, what do we do is compare it. What will be the cost in case I do not use this tool? Meaning, how much will it cost me? Number one, to retrieve the data. I'll give you an example. Let's say it's an exfiltration. Somebody got your database. So number one, how much will it take to get back those tools by forensics? How much will you spend for media? of course you have to tell media what happened. And of course there are penalties that can be imposed in the bank, and even as a data protection officer from the national privacy, they are imposing penalties. So those things, you summarize all those costs and you compare it with the investment that you're buying. Meaning, uh, if I'm going to buy a 10 million protection and I will only use will I only lose 1 million? So it's kind of, that's the balancing part.
Okay.
It has to have a counterpart on how much will I lose if I don't buy this thing. So
Okay. So it's forced proactivity right now rather than being reactive and losing it. It's a sort of insurance for you guys. Sir, how much upskilling is needed right now? And were your employees ready for all of this, especially when, again, internet questions are still here. Even this interview, we were very worried about whether the internet would be holding up. A lot of
yeah,
big telcos are cutting capex, which was supposed to be rolling out, which was supposed to be supporting this digital shift, the work from home and the security. So tell us, do we have the infra? Do we have the skills?
yeah. When it comes to skills, as I said, I'm going back first with the culture. No matter how much technology you pump into a company, and if the culture cannot accept it, like this one, maybe not all of the people who are being interviewed are used to talking. Like me, I'm talking to a camera right now. And just imagine I'm talking to you. So I think it's more on the culture, how they will be living securely, knowing how to secure themselves. And the equipment will come later, because no matter, as my um, CEO says, even if you buy a Ferrari, but if your driver is not skilled enough to drive that Ferrari, it's useless. So
Okay.
I'm going back as a CISO. I'm going back to the basic, the culture, and what do we have right now? The tools that we have right now. Basically, banks have to add some. The generic name of that are the CASB, cloud-based security, so they can secure their information or the data in the cloud.
Sir, last question before we let you go. How do we compare in terms of cybersecurity to our neighbors in Asia? Have we caught up? Are we actually there yet, or at least on track?
I'll just go first with the policies. We're proud to say that BSP in their policy are already at par and even in advance. But when it comes to technology, of course, they have more toys than us.
Okay.
That's when it comes to toy. But the skills, we Filipinos are very good in cybersecurity. Our skills are good enough. And my only message is that they say the weakest link to a chain is the strongest. And I would always say that information security awareness is the greatest defense for all the banks, especially for our clients and for our employees. So clients should know. Number one, I'll repeat, we will never ask for your OTP nor confidential data over the phone or over
Okay.
the internet.
Okay.
That
So
is my
thank you, sir.
message.
That's a very clear message, very specific as well. I like how in your report you said, it makes us think about the viruses if computers came from the physical viruses, the same term. So it's actually something to be really thinking about as we now innovate in this new normal and these trying times. Thank you so much. That was Joey Regala, Chief Information Security Officer of East West Bank. Thank you, sir.
Thank you very much. Thank you very much.
Okay, guys, I want to do a very, very quick 1 minute check on the markets because I'm very interested to see whether we've actually been able to pare back those losses. Not necessarily. We're still down by 1.1%. You can see on my terminal here, we're trading at 6,200 levels. Very quick peek at which ones are leading the charge. If so, again, Jollibee Foods, Globe and PLDT, very interestingly, we had just reported on technology companies and the need for better infrastructure. They're also leading the charge. But a major part, especially the banks as well, BDO is sliding, and a couple of other big conglomerates that, as I mentioned, that were leading yesterday have been sold off. You've got BPI as well, down by 2.4%. despite having mentioned that they are now also tapping the bond market. ICTSI still the biggest laggard, down at 3.8%. Very quick check on our local currency. So you haven't taken a quick peek at that for a while. We are now trading at 50 spot 040 to the greenback, hovering still at those levels. As I mentioned earlier on, we were actually one of the third best performing currencies in Asia. And that's the first look into the business day. Today is June 18, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.